I'm delighted today to be joined by Demelza Hays, Head of Research at Cointelegraph. Demelza, thank you so much for joining us today.
Thanks for having me, Tina.
No, it's great. I'm excited. We're going to talk about your latest report and institutional demand for digital assets. So why don't you just take a moment and give us a brief introduction to yourself and the Cointelegraph Research Division.
Sure. Well, I joined Cointelegraph's research department in June, and we basically produce research reports on various topics within the industry. We released one about 2 weeks ago on decentralized finance. And this report that we're publishing next week, it actually hasn't come out yet, so this is kind of like a sneak peek. This report is on institutional demand.
Great. Okay. So the latest research report you are the co-author of, it will be entitled Discovering Institutional Demand for Digital Assets. It sounds like your co-authors were Dr. Philip Sander from the Frankfurt School Blockchain Center and Dr. Alfred Tauds from the Vienna University of Economics and Business, in partnership with a number of prominent firms in the industry. So lots of academic support, and it sounds like industry contributions. So tell us a little bit about the methodology of the paper and how this research was conducted.
Definitely. So basically there's only one report so far that has studied institutional demand with a survey method, and that was Fidelity's research report that came out earlier this year, and they did one the year prior. The year prior, they focused on their US investors, and this year they focused on their US and European investors, and these are all investors that are already with Fidelity, that already have accounts with Fidelity. Mm-hmm. So what we wanted to do was do a study on basically a broader base of institutional investors across Europe. We're focusing on Europe. And what we did was, in Europe, every single financial market authority has a list of all the professional investors within that country. So we took the list of all the investors, we sent out a survey to each of them, and then in addition to that, in order to boost our response rate, we reached out to the local banking associations and fund associations within 4 countries within Europe, and we requested for them to send out the survey to their members. And this survey was done between June and September of 2020.
Okay. So on the institutional side, what was the typical makeup of the respondent? For example, what type of AUM are we talking about? Big, little?
So there was 2 players that had, basically over 150 billion in assets under management that responded. But if we take out, those 2 outliers, if we just focus on the median assets under management was 500 million. So about $500 million was being managed by these firms. And the total assets managed by all of the 55 asset allocators that participated in the survey was over 719 billion, which is about double the current market cap of the crypto market. And the respondents in the survey are managing about 6 billion worth of crypto assets right now, which is about 2% of the entire crypto market cap.
Okay. And you mentioned that this was across with the focus on Europe. So what were the primary countries that the respondents came from?
We focused on Switzerland, Germany, Liechtenstein and Austria. And the main reason for that is that, during the 1990s, you really had a big pull in California of talent and labor from around the world during the internet boom. Mm-hmm. And, a lot of people could point to the beneficial, kind of property rights and regulations that existed at that time to kind of help promote innovation and companies to form and capital formation. And now, we kind of see that in Switzerland, where we have Crypto Valley, we have a lot of forward-looking regulators, we have a lot of infrastructure already set up, like many, 6 or 7 banks already in Switzerland that are offering crypto bank accounts. Yeah. So we have a lot of the infrastructure there, and that region has really pulled in a lot of innovation in this field.
Okay. So let's take a look at the demand side of things. Exposure, timing of entering the market. Can you kind of give us some key insights into what demand looks like today?
So we, out of the people that responded to the survey, we had 36% saying that they had already invested in digital assets. So this means they either already owned them in the past or they currently own them.
Mm-hmm.
And the majority of them came in during 2019. So that was basically where where most of them joined. A few of them came in during 2018, and also a good portion came in during 2020. So we had, pretty much the last 3 years is where a lot of the respondents had entered into the market. And we also asked them, do you plan to invest in the future, for the respondents that said they have not currently invested. And 39% said they plan to invest in the future. So actually more of the respondents said we plan to invest in the future than said they're already invested. So when you add it up, actually the total of the professional investors that said they'd already invested or they plan to invest, it was over 61%. So a majority of the institutional investors responded saying they plan to invest in the digital asset market, which is phenomenal results.
Yeah, indeed. It's definitely trending in the right direction. We've been saying that institutions are coming for some time, and it sounds like they actually are. So how are they gaining exposure? What's the balance between potentially the spot market and futures markets? What kind of ROIs are they seeing? Like what's the activity kind of looking like when you look on average across the respondents?
Okay. So in terms of ROI, so basically we didn't ask them for specific ROIs on their crypto allocations, but what we did ask them is, what are they investing in? Are they investing in structured products? Are they investing in funds? Are they investing directly and doing custody on their own? Basically what we found was that the majority of people wanted to invest directly. And then the second most interesting was with regulated funds, specifically alternative investment funds. Then it was the UCITs fund. So these are structures of funds within Europe. And then at the end, it was structured products, which is basically certificates, ETPs, ETNs, and then futures. So I have to say that overall, the majority of them wanted to interact with the spot market instead of the futures market.
Interesting. What did they say their main barriers to entry either had been, or what was preventing them from getting involved if they were in that 39% of respondents who hadn't yet?
So we had an interesting kind of perplexing result there. I mean, one tactic with surveys is that you ask people the same question, but in two different ways, just to kind of see if the answer stays the same.
Sure.
We asked them, what is your main obstacle? And a lot of them said regulation. But then, later on in the survey, we asked them, is it more internal policies within your company that's restricting you from investing, or like allocating some of your company's portfolio to digital assets, or is it, regulations within your country that's stopping your firm? And they said that the majority of the problem was policies within their own company that was stopping them from allocating resources, and not government regulations. So I think, either regulations from inside the firm or the government is what is the biggest barrier to a lot of people allocating more assets. And interestingly enough, it was kind of like a digital assets for me, but none for thee kind of like response, because we asked them, are you personally invested? And the majority of respondents were invested personally. It was like 56%. And then we asked them, how much control do you have within your company over allocating assets, like allocating your portfolio to different asset classes? And then it was also, they had majority control, because we always tried to get the survey answered by the head of the allocation strategy. So I think it seems like a lot of people are kind of like on the sideline, still waiting. We did see that there are specific types of asset allocators that are more likely to invest than others. So a really interesting result was, and this was statistically significant that we did regression analysis with, was that the more allocation the investor had to bonds, the less likely they were to invest in digital assets.
Interesting. So what's the correlation there?
Well, I mean, this is only speculation on my part, but I think that it has to fit in with the ethos of the crypto industry, which is that, bonds have always been kind of thought of as this safe haven asset.
Right.
So stock market starts to kind of topple, people, fly into bonds, but bonds aren't actually that safe if you consider that the government might not default, but they might just print money in order to be able to pay back that coupon rate. So, and the principal. And so I think that a lot of people that are really trusting in bonds are also the ones that are least likely to question the current monetary system.
Yeah, that makes a lot of sense. So Bitmain was one of your partners on the report. How do the new entrants view mining?
Well, we did have a little bit of interest in private equity investments in mining companies and in structured products around mining. So basically, the big investors, they don't want to like deal with mining themselves, but they wouldn't mind having exposure to it through some kind, like somebody they trust taking care of the investment for them in a regulated way where they can report, properly back to their stakeholders. So yeah, it was great to have Bitmain on board. I think Europe, some of the northern regions do have interesting electricity opportunities, and so I think Bitmain, writes a very interesting contribution to this report, basically about how an investor could get started if they wanted to. So yeah, that was an interesting insight because it is kind of an economies of scale game. It's not really for someone that's a small household. It is really for a big pocketed investor.
Yeah, definitely. So, you mentioned the focus again being on the EU and regulation being one of the things that may be a barrier to entry. How do you think that the new EU's proposed markets and crypto assets regulation, or MiCA, might affect some of the appetite that you're starting to see blossom in the institutional space going forward?
Well, we didn't ask them about MiCA because I think that might have been announced a little bit after we finished the survey, but we did discuss the rule from the Financial Action Task Force, and we discussed the EU's fifth AML directive. And both were a bit concerning. A lot of them didn't really understand the implications fully. And so if they don't understand the implications fully, they're kind of like, I'll wait for somebody else to do it first. And then once somebody else has paid the costs of compliance, I'll just ask that lawyer to do it again for me, kind of thing.
Yeah.
So I think that, overall it was, especially for example, so Liechtenstein is not part of the EU, but it's part of the EEA. So they have to implement everything that the EU does, but I think they have a 12-month window after the EU has to implement it.
Mm-hmm.
Switzerland, outside of the EEA, outside of the EU, doesn't have either, but they have their own version of the fifth AML directive, and they also are regulated by, or like they would be complying with the travel rule, like all of the Financial Action Task Force.
Sure.
So, the thing is that there's a lot of German investors that want to have bank accounts with Swiss companies or want to invest in Swiss products. And so you really have a lot of international investing going on. And that's really going to be interesting for how these regulations are going to impact them.
Great. So one last question around tax. What do you think the impact of tax rules may have across the region or the countries that you heard from?
Well, I did find out even some interesting information from myself that I did not know. So I always thought that Liechtenstein and Switzerland were kind of like these amazing tax, havens. I've been living in Liechtenstein for the past 5 years, and it is amazing in terms of personal taxation, and corporate tax. However, when you actually look at the crypto laws and how the crypto gains are taxed, Germany is actually much better, and so is Austria. If you are holding the digital asset for longer than a year. So if you're a long-term investor, you're holding, you have to pay zero capital gains on any sales of digital assets in Germany and Austria, whereas in Liechtenstein and Switzerland, you have a wealth tax, and the wealth tax is basically charged every single year based on January 1st, whatever the price of your crypto portfolio is. You have to pay between 0.06 and 0.08, you know, it ranges on how wealthy you are, but it could go from 0.01 to 0.08% of your crypto portfolio plus all your other wealth. And that does start to add up quite quickly.
Yeah.
Yeah, and that's every year eating away. So, you know, there are some taxes that are kind of sneaky that a lot of people don't know about, and we document that in the report. Another thing we found that was interesting is that there are taxation benefits for investing in funds instead of holding directly.
Mm.
So, yeah, if you're a short-term trader, you're living in Germany or Austria, and you're in the kind of upper echelon of the progressive tax rate system there, you know, your personal income taxes are above 27%, then you actually have a benefit of not investing directly in crypto, but instead holding on to a fund structure because that has a lower tax rate at the end of the year. So we you know, there's all these like weird tax loopholes that give benefits to, you know, randomly just. So we try to document that, and it was eye-opening for me, really.
Yeah, it is interesting when you take a look at all the different governance regimes, you know, not just regulation, tax as well, you know, capital requirements, different governance that might be placed if you're, you know, holding clients' money, and looking at in the aggregate may potentially have a different picture for you and for an institution than it would seem just on face value. I think that's one of the complexities or one of the nuances that's come out in this report. There's a lot of things to consider.
So many nuances. It's a landmine if you want to really all the different laws and regulations that exist, and a lot of it's still kind of like new territory. No, some people don't actually know how to properly handle some of these situations.
Yeah, it's still a feeding frenzy for the attorneys. I imagine it will be for a couple of years yet. Demelza, thank you so much for joining us. It was a pleasure to have you, and I encourage everybody to download the report when it's published. When will it be available?
It'll be available on October 20th on Cointelegraph's website under industry reports.
Brilliant. Thanks again.
Thank you, Tina.